Yes, hello everyone. And this video is all about the theory part of partnership operation. So we have the following learning objectives. Number one is to discuss the closing entries in a partnership and differentiate them from the closing entries in a sole proprietorship. Number two is identify and discuss the different methods and rules dividing partnership profits and losses among partners. And number three, discuss and understand the preparation of financial statements of a partnership. So we have already discussed about the partnership formation and how we record the transactions when the partners form a partnership initially, and what are the entries in recording the initial investment when the partner contributed cash, or when the partners contributed cash and non-cash assets, and the entry on how to record when the partners contributed cash, non-cash assets, and industry. And now let's proceed with the partnership operations. So first we have here the preview of the chapter. We have under partnership operations, we have the closing entries, the distribution of partnership profits and losses, and preparation of financial statement. So under the closing entries, we have the revenues and gains, expense and losses, partners share in profits and losses, and partners drawings. And under the distribution of partnership profits and losses, we have the equity, we have the arbitrary ratio, capital ratio, interest on capital, salary allowance, and bonus. And under for the preparation of financial statement, we have the income statement or statement of comprehensive income, the income and the statement of financial position, and statement of changes in partners' equity. So we have here the nature of partnership operation. Usually it's still the same with how we record the transactions of a sole proprietor. But then when it comes to income, we credit the partner's capital account, no, each partner every time there is an increase or decrease in the income, no, of that particular partner. And otherwise, no, the capital partners are being debited if there are drawings and share in the losses in the partnership. No, so accounting for partnership operation is essentially the same, no, as accounting for the operations of a sole proprietor. Now, sale of merchandise and account is debited to accounts receivable and credited to sales, and so on. So it's still the same, no, as the accounting for operation of a sole proprietor. So we have special problems that are being encountered in accounting for partnership operations. So we have these problems. Number one is closing entries of a partnership. So how we close the books of a partnership at the end of the reporting period. And second, distribution of profits and losses. So we have more than two or more partners, no, in case. So how do we record the distribution of profits and losses based on what has been agreed on now in the articles of partnership? Number three is the preparation of a worksheet. So of course, since we are dealing with the partners' capital accounts, so how do we prepare a worksheet for partnership accounting? And the last, the preparation of financial statements. So since we are dealing with partnership accounting, so there is some differences as to the financial statements now in compared to the financial statements of a sole proprietor. So just a hint, no, for the preparation of financial statements for the partnership. So we only have a change in the capital account. So in the sole proprietorship, we have only one capital account, but then in the partnership accounting, we have two or more capital accounts presented in our financial statement, especially on the statement of financial position and the statement of changes in partners equity. So we have here the closing entries of a partnership. So on this part of this video, I will be discussing only the theory part of the partnership accounting, specifically on the partnership operations. And I will make another video for uh, the partnership operations, no, proper, since I'm still charging now my pen. And we have the procedures for preparation of closing entries for a partnership. So it is similar to that of a sole proprietorship. So first, all revenue and other nominal accounts with credit balances. So nominal accounts, when we speak of nominal accounts class, as what I have said before a long time ago, that nominal accounts are those accounts that are being closed at the end of the reporting period. So these accounts are not carried over onto the next accounting period. So these are temporary accounts. So temporary accounts consist of our revenue accounts and expense accounts. Okay. So revenue and other nominal accounts with credit balances. So credit balances, those accounts that have a normal balance of credit. So these are purchases discounts, purchases returns, and allowances are debited. No? Since they have a credit, they have a normal balance of credit. So when we close them to make them zero, we debit it at the end of the accounting period. So they are debited and income summary is credited. So it is closed against the income summary account. And second, income summary is debited, no? So the entry is reverse naman class. No, when we close those nominal accounts, no, and nominal accounts with a normal balance of debit. So when we close them, we credit those nominal accounts which originally have a normal balance of debit and charge it against the income summary. Okay, so income summary is debited and all expense and other nominal accounts with debit balances such as sales discounts and sales returns and allowances are credited. And third, the balance of the income summary account, which represents profit or loss of the partnership, is transferred either to the drawing accounts or directly to the capital accounts of the partner. So uh, we initially have a credited income summary account when we close the revenue and other nominal accounts with a normal balance of credit. So usually we credit the income summary account. Then vice versa naman class, when we close those nominal accounts with a normal balance of debit. So we credit it when we close, then we debit income summary. So credit income summary when we close the revenue and other nominal accounts with a normal balance of credit. And we credit, no, we debit the income summary account when we close the nominal accounts with a normal balance of debit. So we net these two income summaries, no, the credit and the debit, and the difference of it will be closed to the capital accounts of the partner if it is a gain or a loss. So if it is a gain, so it is a credit, no, to the capital account of the partners, and we decrease, no, if it is a loss. So hint class, if our income summary is mas dako ang credit, no, sang income summary ta versus ang na debit, so that means ara siya sa credit. So kung i-close ta, i-debit ta siya para mag-zero, then we credit the income summary account. So that means there is a gain. And otherwise, loss naman class. Okay? So we will see it, no, when we actually have it in the actual computation, no, and we have already have the entries, no, when we have the partnership operations proper. So we have here, the balance of the income summary account is transferred into the drawing accounts of the partners if the partner's intention is to keep the capital account intact for investments and permanent withdrawals of the capital. So as it was mentioned, no, the balance in the income summary account is charged against the drawing accounts of the partners if they want to keep their capital account intact. So they don't want to change their capital accounts, and they want to keep it only for the investments and permanent withdrawals of capital. So the increase or decrease in the income of each partner is charged against the drawings if that is the case. Okay, so a credit balance in the income summary account represents a profit. Okay, profit siya class kay when we charge na it kung credit siya, so kung i-zero ta siya, supposedly ang income summary account gina-debit naton. So, we credit the capital account. So, that means there is an increase in our capital account, no? And its balance is transferred to the drawing accounts of the partner. So, diriya kay gusto yang they want, no, not they don't want to change, or they want to keep their capital account intact, so they charge it against the drawing accounts. Okay? So, siya, if there is a credit, no, balance in the income summary, we debit it. So, to make it zero, then we credit the drawings of each partners. So, any resulting credit balance in the drawing account of a partner may be withdrawn by a partner or reinvested into the firm. So, if the balance in the drawing account is withdrawn in cash, the entry is as follows. So, as we have here, there is income class. So, usually drawing accounts have debit balances. So, kung debit balance siya class, ang credit niya will decrease the drawing accounts. So what decreases the drawing accounts? If this is the case nga hindi gusto ni partner nga ma-change ang ila capital account and they want it only for investments and permanent withdrawals, sa drawing nila gina-charge. So if this is the case, their drawing accounts will be decreased. Okay? So kay income siya. So since income siya, and ang income na if I were the partner, no, if I was the partner, yes, kung i-withdraw na ako in cash, this would be my entry. So a drawing, then credit cash. But if he wants it nga ang gain niya from the partnership will be reinvested, no, into the firm, what would be your entry? So that would be you debit your drawing account and you increase your capital, so you credit your capital. So this is your entry if that is the case, that you reinvested your share in the income from the partnership back into the firm. No, that is to increase your capital account. No, and this is your entry naman if you have a loss, no, and its balance is transferred to drawing account. So your loss, it would increase your drawing accounts. Okay, so wala siya di figure. Patagin nyo lang class XXX and your credit income summary to zero it out. So the resulting debit balance in the drawing account is charged against his capital with the following entry. So since you have incurred a loss, that would decrease your capital account. But then this is a long process class, no? If you want to make your life easier, you directly increase or decrease your capital account, no, depending if the partnership incurred a loss or a gain. If it is a gain, you close your income summary, you debit income summary, then you credit your capital, the capital of the partners. Otherwise, your entry would be you credit income summary and you debit capital accounts of the partners, and that would be a loss. No. Okay? Anyway, kung mag-amo ni class, it's still the same. But I would in practice, it's the capital account that we use, not the drawing. So this charging of drawing accounts, no, is a long process, and somehow the partners usually gusto nila yang nga hapos lang ang ila yang nga accounting. So usually wala na sila gahambal nga they don't want to change their capital, no, like that. Nga they want to keep intact, no, they want to keep their capital accounts intact. So usually in practice it's not. So we have here, yes. Okay. So this is what I've said, no. This is the shortcut, no. Diretso ka capital account, no, when we close the income summary. Now let's proceed to the distribution of profits and losses. So we're done with the closing entries. So let's go to the distribution of profits and losses. So in the distribution of partnership profits and losses, the following factors should be consider. Number one, services rendered by the partners to the partnership. So when we distribute partnership losses and gains, we have to consider the services rendered by the partners to the partnership. If he mostly devote his time, no, uh, devote his time in the managing of the partnership, or he is if that partner is somehow silent or dormant, so they have to consider that. Number two, amount of capital contributed by the partner to the business. So usually if you have a bigger capital now contributed to the partnership, usually you have a larger share in the gains and even in the losses in the partnership. And number three, entrepreneurial ability or managerial skill of the partner, which is also related to number one. Then we have the distribution or division of profits and losses, maybe expressed in several ways as follows. So we have by percentage, by fraction, by decimal, or by a ratio. So we have here in an illustration. So Alba and Ben are partners sharing profits and losses based on their capital contributions of 100,000 and 300,000 respectively. So the profits and losses sharing can be expressed as follows. So this is very easy class now. So if it is by percentage, we have for Alba 25% and Beno 75%. So how do we get that? We have, as we have said, so Alba contributed 100,000, Beno contributed 300,000. So that would total to 400,000. So if we get the percentage, we have 100,000 divided by 400,000, we get this 25,000, and 300,000 divided by 400,000, we get the 75,000. Then if we want this to be converted to fraction, it's also easy. So 25% represents 1/4 and 75% represents 3/4. So by decimal naman class, if this is percentage, let's just convert it into decimal. That's 0.25 for Alba, and for Bueno, that's 0.75. And by ratio, Alba and Bueno, 1:3. 1 share for Alba and 3 shares for Bueno. So if you total this, it would equal to 4, no? Which represents the 400,000. So we have rules for dividing profits and losses. So the previous one is very easy. So the following is the list of rules in the division of profits and losses of the partnership based on the provisions of the new civil codes, new civil code. Number one is as to capitalist partners. So division of profits, it's in accordance with agreement, no, if what has been agreed on, no, for the capitalist partners. Capitalist partners are those partners that contributed cash. Okay, so number two, in the absence of an agreement, division of profits is in accordance with capital contribution. So if there is no agreement class now as to the division of profits among capitalist partners, the division of profits is in accordance with the capital contribution. If that is the case, the capitalist partner who contributed more capital for the partnership will have a more share in the profits and losses in the partnership as well. Now, it is in accordance with the capital contribution. So if we will base it here, no, for Alba and Beno, so if there is no agreement, no, as to the division of profits among these two, so the division of profits and losses will be in accordance in their capital contribution. So in this case, Alba will have a 25% share in the profits and losses for the partnership, and Bueno will have a 75% share in the profits and losses in the partnership. So this is what it means. in the division of losses, here it's in the division of profits only, class ha. In the division of losses, number one, in accordance with agreement, if there is an agreement no, stated no, in the articles of partnership on how they divide the losses among the capitalist partners. Number two, if only division of profits is agreed upon, the division of losses will be the same as the agreement on the division of yes, profit. So number one, in accordance with agreement. So there is a stipulation no stated in the articles of partnership no as to how the capitalist partner divide the losses naman class in the partnership. So uh, means is would that be possible if lain ang division sang income, lain man ang division sang losses? So yes, if it is in accordance with the agreement, if it is stated. So number two naman class, if only division of profits is agreed upon and is being stipulated in the articles of partnership, the division of losses will be the same as the agreement on the division of profits. So if only no, ang division of profits is only stated in the articles of partnership, the division of losses will also be the same on how the profits are being divided. Okay. Number three, in the absence of an agreement, division of losses is in accordance with their capital contribution. So the same class no, in the division of profits. If there is no stipulation no, in the articles of partnership on how the division of profits and the division of losses state is being distributed no, or stated, it is not stated no, both the division of profits and losses, it will be in accordance with their capital contribution. As what I have said, if you have contributed more capital in the partnership, so that means you will also have a more share in the losses in the partnership. Otherwise, you have more share in the profit if the partnership will have gains in their operation. Then we have as to industrial partner class. An industrial partner are those partners who contributed efforts, no, skills, no, ideas no, in the partnership. So as to the division of profits, it is in accordance with agreement. And number two, in the absence of an agreement, the industrial partner shall receive just an equitable share of profits, and the capitalist partner shall receive profits in accordance with their capital contribution. So what is this just and equitable share? Well, it would depend no on the anyway, it's still in the agreement man sa inistoryahan sa mga partners. No, just and equitable. So if you are very industrious no in the managing of the partnership, of course, you will have also a no uh somehow just no inequitable, so it would depend no for the partnership nga hindi siya magsunggod class no if there is a gain no and nagmirabira siya na ubra no for the partnership and there is a gain, so the other partners will give him a just and equitable share in the profits. As to the division of losses, it is in accordance with the agreement. So if it is being stipulated, we have nothing to do with that. So it will be followed. So number two, if in the absence of an agreement, the capitalist industrial partner in his or her character as industrial partner shall have no share in the losses, but in his or her character as a capitalist partner will share in the proportion to the capital contribution. So in this case, no, gin-mention niya is if there is no agreement and the partner is a capitalist and industrial partner, wala siya class share sa losses. As to being an industrial partner, take note of that. But being a capitalist partner, it would always be based on his capital contribution in the absence of an agreement. Okay? So, miss, what if muna wala na gid siya wala siya capital industry lang. Usually, as I have remembered, kung industrial partner ka lang and you don't have capital contribution to the partnership and the partnership incurred a loss, usually wala na siya class, wala siya share sa losses. But then if there is a gain and he is only an industrial partner, so we will follow this. No? Number one, accordance with agreement. Number two, just and equitable share. Okay, so we have methods of distributing profits based on partners' agreements. So we have number one, equally. So it is simple to apply but does not give due recognition disparity of capital. So equally class, for example, apat ka mo, no? Apat ka mo, but then may ara nag-contribute gamay, may ara nag-contribute dako, but then as to the methods of distributing profits, if there is a gain or a loss, equal ka mo nga ma-share. So amo ning hambalya nga it does not give due recognition on the disparity of capital contribution, nor does it recognize the time and effort that a partner may devote in running the firm's business operation. Kay tag 25% makamugyapon, no, if you are four who formed a partnership. Number two naman, it's arbitrary ratio, percentage, decimal fraction, or ratio. So it is simple to apply but does not give recognition on the disparity of capital contribution, nor does it, why? It's still the same. Recognize the time and effort that I'm, arbitrary ratio. Oh, see, yes. Arbitrary ratio, dogin ano lang siya class, though somehow dogin mention lang siya, no? No? Yes, it is simple to apply like arbitrary ratio lang. For example, tag 25, 25, 30, 30. Yeah. Am I right? No. 25, 25, 20, 30. For example, 40 ka mo. So, 25, 25, 20, 30. Or 40, 40, 20. Yes, 40, 40, 20. Kung tatlo. No, as long as it would equal to 100%. So, arbitrary ratio. No? Ang pinaka the best is for me it's the capital ratios, original, beginning, ending, or average. So we will discuss this, how is this original, beginning, or ending, average, no? How is this possible? So this method recognizes the differences in the capital contribution but does not take into account the time and effort that a partner may devote in running the firm's business operation. So diri naman niya class, yes, it recognizes your capital contribution but not your time and effort. Okay? So dire, for example naman, kung nag-contribute ikaw 20,000, ang isa is 30,000, ang isa is 40,000, and another is 10,000. So that would equal to 10 out to 100%. So 20%, 30%, 40%, and 10%. So that would be their capital ratio. No, but then wala gin recognize ang imong effort, but still it's easy. Number 4, interest on capital and the balance on agreed ratio. So this method recognizes the difference in the capital contribution but does not take into account the time and effort that a partner may devote in running the firm's business operation. So interest is allowed to partners for the use of invested capital. So interest as agreed by the partner shall be allowed in proportion over the period such capital was actually used. So moreover, the interest shall be provided whether the income is sufficient or insufficient or there is a net loss unless otherwise agreed upon by the partners. Miss, ano na siya, Miss? This will be, maintindihan ni siya naton class, no? Later on when we have to record various partnership transactions and taking into account the sharing of their income, no, or losses, no, at the end. of the accounting period. Number 5, salary allowances to partners in the balance on agreed ratio. So this method recognizes the time and effort that a partner may devote in running the first business operation, but does not take into account in does not take into consideration the difference in capital contribution. So effort lang class ang iya ginisip but not the capital contribution. Okay, we have the bonus. Okay. So the last part or the last theory part is the bonus. So the bonus to managing partner and the balance on agreed ratio. So this method allows a bonus as an incentive now to the managing partner. So it's a form of an incentive fee no ginahatag natin sa managing partner. So it is usually a percentage of a profit. So bonus therefore is allowed only when there is a profit. Of course, class, how can you give a bonus if you are incurring a loss? Okay, so it may be computed using any one of the following as basis. So first is bonus is based on profit before deducting bonus and income tax. So this is this a bonus no bonus accounting amo na siya do ginatawag ko man. Is somehow very tricky and medyo na budlayan kuno sa una, but we'll see if we can make this easier. So number 2 is bonus is based on profit after deducting bonus but before deducting income tax. Then C is bonus is based on profit after deducting income tax but before deducting bonus. And the last one, this is letter D. So bonus is based on profit after deducting both bonus and income tax. So we have here interest on capital, salaries to partners, bonus to managing partner, and balance and agreed ratio. So we have, yes, we will have this on a separate discussion. Thank you, and we're done with the theory part of the partnership operations.